Welcome to Shooting It Straight with Stan. I am your host, Stan the Annuity Man, America's annuity agent, licensed in all 50 states. Today's topic is always reverse engineer annuity income quotes. So, what do I mean by reverse engineer, Stan? Stan, you do not look like an engineering student or someone who could major in engineering. That is absolutely correct. I did know those people and I high fived them as they walked into the math part of the college that I never went into. No, I mean, but with annuities, and there's many annuity types, so you just can't hate all annuities, as I always say. But there are primarily four types of annuities that solve for what's called lifetime income, longevity risk, the fear of outliving your money, pension type income. Remember, annuities were put on the planet back in the Roman times for the dutiful Roman soldiers and their family as a pension payment for their service to the empire. ANNUA, annual, means payment, I think, in Latin. That's what I've been told. So that's where the whole annuity thing started. But what I always tell my clients, and what I want to tell you, because I want you to be a client, if it makes sense, contractually, is use as little amount of money as possible to solve for the goal. I know what you're saying. Stan, wait, what? You mean, Stan, if I gave you a bunch of money, you might say, don't use as much, all that money that I want to give you? Yes, I would say that. A couple of reasons why. Number one, the annuity industry frowns upon you using more than 50% of your investable assets. That an investable assets does not include real estate, house, car, guitars, and all that stuff. It's IRAs, 401ks, 403bs, checking accounts, saving accounts, brokerage account, those type. So 50%. Can we push it just a little bit more? If you give us a reason, I use a bullet. Yeah, maybe 55%. But you should not use too much money in annuities. And anyone that's telling you that you can use more than that, they're pushing the limit and putting their license on the line. So, which leads us back to the reverse engineering of the quote. Now, if you go to my site at theannuityman.com, you can run quotes two different ways. And we have the best calculators on the planet, quoting pretty much every single carrier on the planet. And annuities are commodity products, and you buy them for the highest contractual guarantee for your specific situation. Using our calculators, you can either say, okay, I have 100,000 or 200,000 or 350,000. What would the lifetime income stream be? Depending on how you structure it, single life, joint life, whatever, okay? There's a myriad of ways to structure it. Or you can say, on a reverse engineering strategy, I need $1,500 a month. How much would that cost? And so we're going to shop all carriers to find the best carrier. Obviously, best claims paying ability. That's going to require the least amount of money to contractually solve for that goal. So you might say, I need $1,000 a month or $1,500 a month or $1,250 a month, whatever it is. Then you put in the parameters that you want: life, joint life, life with cash refund, life with installment refund, life with period, whatever that is. And we're going to quote all of that and show it to you. And then you're going to see how much money it's going to take. In other words, using the least amount of money. So a lot of you out there are going, wait, whoa, Stanley. What about inflation, son? What about inflation? Well, that's the great part about the reverse engineering of the lifetime income quote, is when inflation hits your specific situation, not when the cable news person tells you it's hitting, when it hits your specific situation. Give you an example. Let's just say you solved 2 years ago for $2,000 a month. And two years later, you need an additional $250 a month because of inflation. Then you go back to my site, theannuityman.com, and pull up the single premium immediate annuity calculator and put in $250 a month, solving for that gap for inflation, and see what carrier, obviously A plus or better when you're doing lifetime income, that's going to require the least amount of money to contractually solve for your specific income situation. And that's how you do it. Remember, there's only two questions to ask when you're looking for annuities. What do you want the money to contractually do? And when do you want those contractual guarantees to start? So reverse engineering quotes using my calculators for single premium immediate annuities, deferred income annuities, qualified longevity annuity contracts, and income riders. We let you do a reverse engineer quote if you want. You can choose. You can do lump sum or reverse engineer. But the bottom line is, what I want to stick in the back of your head is, go into the annuity purchase with the goal of using the least amount of money possible to contractually solve for your specific income goal. You can also do the same thing if you go to my MIGA live feed, and MIGA is multi-year guarantee annuities, what that acronym stands for. That's the annuity industry's version of a CD. It's a guaranteed principal protection, no annual fees with a annual guaranteed interest rate. Sounds like a CD because it kind of is. And you can do the same thing. We don't have that calculator on the MIGA site where you can reverse engineer that interest rate quote, but that's just basic math. You can't do that. Then we need to go back to the school you went to and ask them why they didn't teach you that. But you could do the same thing if you said, hey, this MIGA's getting X percentage and I need to peel off the interest from it and not touch the principal. That's easy math. So you can do reverse engineer quotes with that. But the reverse engineering strategy primarily revolves around single premium immediate annuities, deferred income annuities, qualified longevity annuity contracts, and income riders. And all four of those lifetime income strategies are on my site at theannuityman.com, and you can run those quotes 24/7, 365. And what we do is when you run the quote, we give you a full snapshot of what all the quotes will be: life only, life with 20, etc., life with cash refund, so you can see how the annuity company is pricing that lifetime income guarantee. Just remember this as well. When you do a reverse engineer quote, it's a lifetime income payment as long as you're breathing. If you're on a ventilator, as long as that ventilator is rolling and you're breathing. If it's joint life, we can set it up so as when you pass away, the income continues uninterrupted and unchanged for your surviving spouse. And it's going to pay as long as they're breathing. Okay. Also remember, if you want an increase with inflation, I would discourage you from that, because the annuity company doesn't give that away like Social Security does, which is the best inflation annuity on the planet. I would do what I'm talking about right here, which is buy the static payment, which is high. And then if you need to fill in an income gap to that income floor, then reverse engineer that quote for that income gap. Remember, annuities are commodity products. Annuities are math. You shop all carriers for the highest contractual guarantee for your specific situation, and you never, ever, ever, ever buy a lifetime income product with some type of potential hypothetical or theoretical type increase. Buy the static payment because it's going to be the highest, okay, and reverse engineer the quote, period. I would also encourage you to look at taking the income now. A lot of you out there have been scrimping and saving and working hard, and you've gotten to the finish line, and you still have in your brain, well, I can go a couple more years without. No, live life for today. Chapter 2 is about you. And with, annuities for lifetime income, that's that income floor that's combining with Social Security, which is the best inflation annuity on the planet. If you have a pension, that's another annuity. And in my world, I believe that required minimum distributions from your IRA is an annuity type payment. It is, because you have to take those RMDs. At the time of this taping, the age is 72. It'll probably go up after this if you're watching this down the road. But the point is, you have to take that money out whether you need it or not, kind of like an annuity payment, right? So that's part of that income floor. So just remember this. When you're looking for lifetime income, guaranteed lifetime income, whether you need it to start now or in the future, you can go to my site and run reverse engineered income quotes to find the best carriers out there that's going to guarantee that lifetime income that you need using the least amount of money. And you can keep your powder dry and invest the rest, right? Makes sense to me. Should make sense to you. That's Shooting It Straight with Stan. My name is Stan, the Annuity Man. And yes, I am America's Annuity Agent. See you next time.